Gold prices sink for a third day. John, I know we got that 27% margin hike from the CME that goes into effect after trading today, but you know what? Gold was already down 9% before that. What's really leading the charge here?
At the end of the day, I think what you're looking at is basically your average psychiatrist waiting room. Human emotion on display, fear, greed, the whole 9 yards.
So is this a bubble that has burst? Or is this just a dramatic short-term correction that at some point we're going to see some fundamental jewelry demand, for example, start to kick in?
Well, that's the question of the day. I mean, there's a whole contentious camp that says, no way, we're still going to 5,000 and 10,000 down the road. This is just a little pit stop. And, of course, another camp that says, you can't undo a market like this and have the biggest fall since 1980, actually, and not do damage, if not yet on the charts, certainly to the psychological component of this market, retail players specifically. At the moment, I think it's just simply a waiting game. It's, waiting for Godot, waiting for Bernanke. But, jewelry demand hopefully will kick in here because festival season in India is and marriage season is just
right.
A few weeks off, and hopefully something under 1,700 would attract physical buyers.
Now, I know we're waiting for Ben Bernanke's speech on Friday, but in terms of comparing this to 1980, if we do see that kind of 43% sell-off that we saw then, that's taken gold down to, 1054, 1094 at this point. Aren't there, though, some more fundamentals that will support against that kind of decline? You mentioned jewelry demand, but also, central bank buying from China. These really weren't in the market back in 1980. Doesn't that count for something?
It should count for something, but if you recall, a couple of weeks ago, we brought up the possibility of a 35% correction, something on the order of what we haven't had since about 2008. So even 12% at this point is about a third of that. We have to see whether or not the mid-1600 level, 1650 to 1680 holds, and then more significantly somewhere down in the 1480s.
All right, and then last up, how does Ben Bernanke's speech on Friday then change or affect the gold market?
I think here a lot of markets are setting up for disappointment. The man is really not in a position to automatically have a knee-jerk reaction every time the markets whine and give them something.
So if we do see that disappointment, that might be good for gold, though, no?
To some extent, it could be. Depends on what happens. If it's an across-the-board sell-off in all types of assets, that we're predicating their further advances on easy money. If we have a wipeout of that nature, it could be a short-term sort of across-the-board sell signal.
All right, thanks, John. I appreciate it. Wait and see then. Gold waiting for Bernanke. Thanks so much.